Hello. So in today's video, I'm going to cover a walkthrough breakdown of my 10K trading week. So far, it's Wednesday. This video is going to go very in depth. It's going to be a little bit of a longer video. I promise you, I go through a lot of different topics. I spent a lot of time talking about sort of two different trades that I had taken. I'd taken a SPY trade yesterday at the 410 level, 410.50. And then I also talk about a 407.50 key level from the hourly time frame. And I also will talk about a massive AMD breakdown below 94.50. This is a very comprehensive video. It's gonna be a little bit longer. I recommend sitting through, watching it fully. If you guys have any questions, leave it down in the comments. Again, this is a little bit more of some advanced topics, so I recommend watching it a little bit slowly. I know I can go a little bit fast in this video, so make sure if you have any questions, leave it down in the comments and we'll get right to it. For me, how I trade SPY is I will only trade it if it's approaching a very key level. So all I really will do when I trade SPY, just the whole strategy boiled down into two sentences, is I will look for a strong trend, right? Look for a strong trend to form, and then I will look for a pullback, or I will look for a strong trend to the downside and look for a pushback up for me to buy puts. Very simple strategy. Now, it sounds simple in those two sentences, but how do you actually find these key levels? It's a long story, but how I do it is I use the hourly and 4-hour time frames and identify key areas where there is a clear inflection point. These inflection points have to be so critical and typically psychological levels where you will 90% chance, 85% chance that there's gonna be some sort of reaction off that level. And as a SPY trader, we don't need to catch those crazy high day, low day moves. What we have to do is just catch a dollar move on SPY. If you can catch a dollar move on SPY every day, twice a day, once a day, you can be a very profitable trader. So for me, how I've learned to trade SPY is just to come in, scalp those dollar moves off those key levels, walk away. That is how I've transitioned my win rate to be about 70%. It used to be about 70% when I was trading SPY to now almost 95%. The reason why, right? The whole reason why is because I just wait for these key levels. So there's a very high likelihood that there's gonna be some sort of reaction off these key levels. And even if there is no reaction, if it's a very muted reaction, I have very well-defined stop losses where I know exactly where I'm getting in, I know exactly where I'm gonna get out. So on the times where I do lose, that 10 to 15% of the time, it's not going to be a major loss. It's going to be typically around 15-20%. And I'm okay with those losses because the gains are usually 15 to 30%. So I have almost a 2-to-1 R on a lot of these trades. I want to talk about these trades. I want to go into it and not spend too much time going over the nonsense parts. Let's go over to SPY. So yesterday I was watching two different bounce trades. I was watching a 407.5 bounce and I was also watching a 410 bounce. So there's two different levels I was watching, but there are two different entries I got in. I got in around 9:45 and change, where I bought calls and sold the top. And I also got in at 10:20, right? Sold the top. And then finally, I had missed this trade, but this was my main watch, was this 407.50. So I want to talk about all these different setup. And I want to talk about which one was the cleanest and how I would have traded it if I did take it. And these ones, the ones I did take, how I actually did trade it. Hourly time frame, right? Hourly time frame. What I saw in SPY on the hourly, everyone can visually see this. It makes sense. Nothing crazy here. Is that we were in a very strong uptrend. We're in a very strong uptrend. Nothing crazy, right? We're in a clear uptrend all the way up until around the 4th or 5th, right? This was the uptrend we were in. Now, this uptrend, right, was followed by a series of major resistance levels that we retest, move higher, break, retest, move higher. And you can see this 410 level, right, was a major area of resistance, right? 410 psychological level combined with a major area of resistance. And you can see why it's resistance. Why is this? Why am I calling this resistance? I'm calling it resistance because you have lots of different wicks right off this level. If you zoom in the 5-minute time frame, you'll go and analyze the micro candles here, and you can see all the reactions off this 410 level. There are reactions off this level. This is what matters to me. There's reactions. There's very little invalidations. You can see there's a little bit of choppiness over here, but everything around this 410 level is very clean, very clean. And remember, when I'm trading SPY, I'm trading with psychological levels. So how do you trade this? Well, on the 5-minute time frame, back on that current day, back on Tuesday, right? Let's just go back to Tuesday. All I'm looking for, right? We're strong in the pre-market. We're strong in the pre-market, right? We're very strong in the pre-market. So all I'm going to look for is a quick reaction, a little knee-jerk reaction off this level. Now, when I'm watching SPY, when I'm trading SPY, I will use a 50-cent margin. This is very important, right? This is absolutely critical. When I'm trading SPY, I use a 50-cent margin. What does that mean? If I want to get in at 410, I'm going to scale in with a 50-cent margin, meaning I'm going to scale in as early as 410.50. 410.50 is going to be my first scaling point. And how I scale in, I use something called a 25-25-50 or a 50-25-25. In this case, I was very confident that we would see some sort of reaction off this 410 level. It was the after hours low. It was a nice intraday level from the previous day. And it also was that key hourly level we just had seen back from those prior weeks. So I knew we would see some sort of reaction off this level. It also was that 5-minute 200 MA. So that being said, let me just remove this so it's not in our faces. And let's zoom into the price action a little bit. So we come right into my 410.50 level. And this is where I buy my starter position. I see a little bit of downside. I see about 10, 15 cents of downside and me rip off this level. Now, my intention of this trade, as you guys know, is to scale in, meaning I want to buy more calls as we move down into my zone. That's my intention. Now, you can see we come into my level. I buy 50% of my position. So at this point, I'm buying about 40 contracts, 30 contracts. I think this was actually about 25 contracts here because I didn't get full size. And all I'm doing, right, is I'm going to buy here at this 410.50 level. I'm going to buy more into 410. My stops are a break below 410. That's it. I'm gone. And that's it. Right. And then what do I sell? My sell price is going to be the opening print, right? The opening print price. And this was about 411.30. So all I'm doing is buying at 410.50, selling at 411.30. That's an 80-cent move I just caught on SPY. On SPY, this was about a 30% profit. I believe I bought them for 0.65 and sold them at 0.9. I'm happy with that. Right off the gate, I'm very happy. Now you can see an aggressive approach down, right? Aggressive move down. And right now what I'm going to do is I'm going to jump to the 2-minute time frame. I want to show you something in the 2-minute time frame. On the 2-minute time frame, we see an aggressive move down. So I just sold. So basically, I buy my calls here. I sell my calls here. Now I'm looking for a re-entry in SPY. We're pulled back right to my 410 level. And what am I noticing about volume, right? Notice the volume here. The volume is really picking up aggressively. Let me just remove these levels so it's a little bit cleaner to see. The volume is really picking up to the upside. I don't like to see that when I'm taking bounces. So I'm not going to, I wasn't here, right? When I got my second bounce trade on SPY, I wasn't going to be buying into this downside move. What I wanted to do was jump to the 2-minute time frame, right? And I wanted to see a clean green closure above my demand zone for me to go long. And that was here, right? So I saw that clean 2-minute closure and I bought the pullback in this candle at 410.20. And my stops, very well defined here. All I'm doing is stopping out on a break below 410. Very simple. It's a stop below low of day. I stop below my key level. So I'm risking about 20 cents for a move back into 411.30. Now, when I bought these contracts, the contracts were so deflated, right? Because of this downside move that they were so cheap. And when they moved up, right, this little uptick was almost 40% on the call premiums on 0 to D. So I sold into this previous structure point, right? This previous structure point and this little micro supply, right? This little intraday supply zone, you can see, right? This little bottom of the structure and that little high of day, right? So I sold in that move and walked away, right? And the important part about this, the reason why I wanted to go over this trade was because one, I didn't like the volume, right? I didn't like this aggressive selling. You can see the momentum is clearly picking up to the downside. We eventually broke. But what I waited for, my confirmation was using that 2-minute time frame, waiting for a clean candle closure, longing the next pullback, defining my risk. This is how I will buy a trade, get into a trade when I'm seeing a lot of aggressive downside action, is I'll wait for a 2-minute candle closure above my key technical level. Then I define my risk and execute. I'm not going to buy into this red candle here. This looks really bad. This is garbage. This looks horrible. So what I want to wait for is just for it to either break below, in which case I'm out. I'm not going to take this trade, or I'm going to wait for a 2-minute candle closure above that 410 level. That is where I now have confirmation for longs, and I'm now going to enter with a stop below lows, right? Very simple strategy. This is how I trade SPY, right? Now, the next level that I had on SPY, my main watch for Tuesday was this 407.50 level. Where am I getting 407.50? Remember we talked about the hourly time frame, right? Hourly time frame is my bread and butter when I'm trading SPY. Let's go into the hourly time frame here. My whole strategy, what has allowed me to be consistent trading SPY, is I look for these key technical levels. What can you guys see about 407? I know if you guys could respond to this video, you guys are probably yelling it out. Look at this 410 level, 407.50. You can see 407.50, even though it's not technically a psychological whole number, it is such a key level. You see these crazy impulsive moves off 407.50, 407.50, 407.50, 407.50, 407.50. This is the massive inflection point in the market. There is a very high likelihood we were going to see some sort of reaction off this 407.50. And for that reason, my whole mindset that this entire Tuesday was to look for a pullback into that 407.50 to go long, right? So if you go the 5-minute time frame, you'll see exactly what happens off that 407.50. And I talked about something before I jumped on this early on in the video, which was talking about how your risk is so well defined, right? If you're getting it at 407.50, where's your stop loss? Your stop loss should be about a 50-cent margin. So it should be about below 407. And you can see It came right into 407.50. The low of day was around 407.28 and change. You would have stayed in this trade, and you saw a crazy impulsive move to the upside back up into almost 410 level, right? 4930. These are the type of trades that are winning trades, because a lot of times, right, even though there might be selling pressure coming in, you're going to see some sort of reaction off these key technical levels. That is the important part about trading SPY. This is what has allowed me to become a profitable trader trading SPY. And I also hope that you can take some of these strategies and bring it into your own sort of toolkit so you can also trade SPY profitably. Now, let's take a whole pivot. I want to take a whole pivot right now. And I want to talk about the trade I've taken today. I've taken 2 trades on AMD. AMD, completely different setup, completely different strategy. However, I'm also trading with key tactical levels and trading with momentum. So I want to talk about AMD for a second. AMD was a trade I had taken this morning right off the gate. It was a very high conviction trade. I made almost 3K in AMD today. And why I was able to take this trade, how I was able to find this before it obviously sold off almost into 90, was based upon pre-market action, based upon news, and based upon the technical level. 3 factors here, right? And repeat it again: pre-market action, technical level, and news. This is what makes a very, in my perfect conditions for a prime A+ setup. AMD, right, on the hourly time frame, you can see here right now, this is showing what it looks like right now. So on the hourly time frame, you can see potentially was forming a head and shoulders. Besides the pattern, right? Besides the pattern, you can see that it's been in a clear downtrend recently. It's been in a clear downtrend, and you can also see that on the hourly time frame, this 94.50 level has been the key technical level that's been holding AMD to the upside, right? This little demand zone here, stretching from 95 to 94.50, has been the entire zone that AMD has been trying to hold up above. And as soon as you break below 94 or 95, really 95 to 94.50, you know that there's nothing but room down at 93, right? Nothing but room down to this 93 level. You also know that if it gets below 93, right? If it gets below 93, it has room down to 90. And the reason why I know that is because stocks like to trade between levels. When a stock breaks one key technical level, it magnets down to the next key technical level, assuming you have the momentum to back that move, right? And how do you know if there's momentum to back that move? How I knew that was because the pre-market action was very weak compared to SPY. So this is SPY's pre-market move, right? SPY's pre-market price action compared to AMD. What do you notice about AMD? AMD is significantly weaker. You can see that from its after hours basically close price to where it was trading at in the pre-market, it was down 1.3%. Compared to SPY, SPY was down almost 0.24%, right? Almost flat off the pre-market. So I can tell you right off the gate that AMD was significantly weaker than the S&P 500, right? And for that reason, all I'm looking for is for AMD to break below this 94.50, to break below its pre-market low for us to get a move lower. And you can see if I were to continue on this price action, you see we actually break in the pre-market, we start selling in the pre-market, and it was this retest right off the gate at 935 where I'd seen the little breakdown and retest of my key technical resistance that I went short into. Now, why am I showing you guys this trade? The reason why is because it's very similar to the strategy I trade on SPY. I'm waiting for these key technical levels to break, and I'm going long or going short. In this case, we break below, we retest it all in the 5-minute time frame. If I zoom in a little bit better, you can see it, right? We retest it on this very candle here at 935, right? And I get in there, I execute, and my stop loss is very simple. It's above 95, right? It's above 95. I'm risking 50 cents. I'm okay risking 50 cents on a stock that's clearly trending to the downside. It's clearly weaker than the S&P 500, right? I'm okay risking that. And then where's my target? My target is 93. So all I'm going to do is buy puts here, right? Stop above highs, and I'm going to target that 93. This is an A+ setup. You have that 3 catalysts moving the stock to the downside. And then what happens? We plug right into my 93 level. We bounce right off of it. I sell into this trade right here. I sell into that. I'm not going to wait for this green candle to form. I sell into that and walk away. Now, my whole mindset on AMD is now if I want to double dip, if I want to get in again, I have to watch for one of 2 things. I have to wait for AMD to either push back up into its supply zone, right, into this 94.50, or I want to wait for AMD to lose this 93, break and retest 93 for a move lower. So what? Very simple. I wait for it to lose 93. It takes a long time. It eventually loses it here. And this is where I get into my new position in AMD for a move lower, right? And you can see how I ended up trading this was I just used the 5 EMA and I got that whole move to the downside. Pretty much around here is where I stopped out. And I took about, I think it was like a 40, 50% profit, right? Beautiful trade. And this is how you trade relatively weak stocks, right? Compared to the S&P 500. You just wait for key technical levels to break. You define your risk and you execute. This was all I wanted to cover in today's video. I know it was a lot of information. I know this was a little bit of a longer video. I really do hope it helps you. If you guys have any questions, leave it in the comments. I'm happy to go through and go deeper if you guys have any specific questions about anything. So thanks again, and looking forward to some more videos with you all.